It's all about earnings today. Let's start with big oil. Petronas' second quarter numbers are in and they're not pretty. Net profit plunged 96% on low crude oil prices and a big chunk of impairment losses. Earnings fell to just under 350 million ringgit, while top line was 21% lower at 48.4 billion ringgit. Net impairment losses totaled 7.2 billion ringgit. The state oil giant says impairment charges in the coming quarters shouldn't be as significant. Petronas boss Wan Zulkifli says the combined factors of oversupply, growing inventories and slower demand growth point to an ongoing gloomy outlook well into 2017. Despite the tough times, Wan Zul says the group is still committed to paying the 16 billion ringgit in dividends to its ultimate shareholder, Ministry of Finance Inc. It already forked out 6 billion in the first half of FY16. The remainder will be paid out anytime between now and November. Opposite fortunes at Nestle Malaysia, bottom line grew 52% to 189 million ringgit thanks to higher exports and a lower effective tax rate. Revenue came in at 1.2 billion ringgit, up 8% year-on-year. During the 3 months to June, Nestle saw an 18% growth in its export business. It also saw a 6% growth in domestic business on the back of successful marketing and trade promotions. The group declared an interim dividend of 70 cents per share. Going forward, the F&B giant is expecting the second half of 2016 to continue to be challenging. It says the Brexit shock will continue to have some bearing to the global and local economy, though it remains positively cautious for the remaining 6 months. Genting Group is reportedly looking at running a gambling joint in Toronto, Canada. According to the New York Post, the gaming giant is among 6 bidders, including Caesars Entertainment, for a casino project in the Ontario capital. Reports that Toronto voted in July 2015 to approve a casino with live table games if it included an entertainment complex. At least 2 development sites in the city are reportedly under consideration. The New York Post says the Ontario Lottery and Gaming Corp expects to announce a winner late next summer. Second quarter earnings at AMMB Holdings are down about 5%, thanks to a hike in other operating expenses and as net interest income and its Islamic banking business shrank. Net profit came in at 323 million ringgit. Net income was flat at about 2.1 billion ringgit. CEO Sulaiman Muhammad Tahir says the group is expecting business and economic conditions to remain challenging in the near and medium term, which will see both loans and deposits grow at a more moderate pace. Credit costs and potentially some sector-specific stress should normalise. Bright spots and opportunities like the SME sector will still be there. Sulaiman points out that the group has a sound balance sheet and overall asset quality remains healthy, though it's keeping an eye on select sectors. Over at Alliance Financial Group or AFG, first quarter numbers improved by almost 9% due mainly to higher interest income. Net profit reached 132.5 million ringgit, while revenue was just marginally higher at 475 million ringgit. The results were due to AFG growing its best performing segments and optimizing its deposit mix. Group CEO Joel Conroy says during the 3 months to June, SME loans grew 16% and net interest margins improved to 2.22%. And because of its loans growth strategy, AFG was also able to maintain healthy liquidity. The group's total capital ratio meanwhile remains near the top of the industry at 16.3% versus 13% a year ago. For the remaining quarters of FY17, AFG will continue to improve its balance sheet efficiency and risk-adjusted returns and focus on loan origination efforts.